Oliver, in recent days, we've had not one, but two international cosmetics companies reduce their businesses in China. What are we to make of this?
Well, yes, we've seen L'Oreal, which today has said that it's pulling its Garnier brand out of China, although it's keeping its other brands there. Last week, Revlon said it was pulling out of China altogether. What we make of this is that China is not an easy place for cosmetics companies to operate, for all the great potential of all those sort of over 1 billion Chinese people. It's difficult to make money, and there's a lot of competition, so not everyone can do well in the market.
But surely the market is so large that investing now, even if you're not getting good results right now, is the sensible thing to do.
Well, that's been the prevailing trend from a lot of consumer companies over the past 5 to 10 years, from retailers such as Walmart and Tesco to consumer goods companies such as the cosmetics companies or Unilever or Procter & Gamble. They've all been expanding into China. What they've not been doing is telling us how well they're doing. That's quite an important thing. All the money that's gone in, some of them split out sales figures for China, although a lot don't, and very few say actually what profits they make in China. And that's quite important because profitability in China is quite low in some cases. From the few examples we do have, for example, in the beer industry, we know that margins in China are very low. It's a very competitive market. It's very hard to make profits there.
So what would Lex propose then to a manager of an international conglomerate? Big potential in China. We've struggled so far. What is the right approach?
Well, two things really. The first is be selective. It's very easy to talk about the Chinese market. Actually, China is an awful lot of different markets, so be very selective about which markets you're going to go for and which not, and don't throw money at the issue. That's why what Revlon and L'Oreal are doing is actually quite encouraging. This is companies being selective. The other thing is be more open. If you're going to continue throwing shareholders' money at China, it's worth telling those shareholders exactly what you're doing with it and what kind of returns they're making from it.